I want to quickly show you how you might use 80/20 Investor to speed up your research and find the very best investment opportunities out there. Now, if you're looking for a European fund, for example, what you might do is you would start in our best of the rest section. In this section, this is where all our research actually filters down into. So we analyse tens of thousands of funds. We start with every unit trust out there that you can buy, investment trust and ETF. No one else does that sort of level of detail. And then we apply our momentum algorithm and our various screens to get down the very best opportunities that are available under the unit trust universe, the investment trust universe, and on ETFs. We'll focus in this video on unit trusts, and they're the ones that most retail investors will use. Now, starting with European, excluding UK, this list here are the IMA sector titles that you will probably mostly recognise. So we go into Europe to start with. At the top here, there's a table, and this table are the 4 best opportunities. Now, in each section within in the unit trust area or the investment trust area, there won't always be 4. We only highlight good opportunities that for momentum. So, unlike other people out there who will always pick something in every category, if we don't think something's got some momentum that makes it a much better buy than all of its peers, then it won't appear on here. So, these ones have been screened and compared to their peers, and actually we've identified them as having a trend of upward momentum. Now you can see here there's a fund name, the ISIN code, which is the code you could take to find that particular investment on your broker's website, say Hargreaves Lansdown, the 1 month's return, the 3 months return, and the 6 months cumulative return. And this, interestingly, this figure here, the max fall in the last 6 months, on 80/20 Investor, we don't just focus about upside, because the biggest downfall of a lot of momentum investors is they just go with any trend. We go for stable trends, so we actually, not only do we screen out the ones that are going to be crazily erratic and likely to be tomorrow's losers, even though they're today's winners, we also like to focus on the downside, because lots of people always focus on the upside. It's one of the downfalls of the finance world. They're always trying to sell the positives, but we like to look at the negatives as well. So here, this max fall in the last 6 months gives you an indication of the maximum height from its biggest drop in the 6 month period that occurred. So on the CIS, European growth, that was 5.39% from the top point to the biggest drawdown. And then last but no means least is the ongoing charge. Now, keeping charges low is crucial. Although all the figures here that we quote are net of charges, still keeping charges low is one of the biggest factors that you should try. It's not the most important, but it is important. What it does is compounding of expensive charges will eat into your returns over time. So we allow you to screen by charges as well. And a lot of people out there don't, because this data is very hard to find and it's not all pulled into one place. 80/20 investing is all about that, having data at your fingertips to make a decision. So once you've got the data at the top here that gives you sort of cumulative data, drop down to the bar charts, which are showing the discrete data for individual months going back 6 months. In this example, June to November. And each fund is highlighted and we can see the individual performance by month. So the reason we do this, because momentum investing is not about just picking the best performers. That's what a lot of people do out there. The key is to actually build into momentum. Successful momentum investing is to build into how those returns were made. If all the returns were just achieved overnight and actually the fund was all over the place and the returns you got were very erratic, to me that's not a stable trend. What we're trying to do is allow you to buy. That's a bit more like gambling if you're going to just be picking things all over the place. We're trying to pick stable trends. So what you can do here, for example, is you look at these funds and you can see how when the market's fallen, each has performed. When market's gone up, how they performed. And in this particular example, they're kind of, when the market goes down, they've all tended to drop. But what's interesting, they don't all drop the same. So, for example, here, Jupiter European, if you hover over, you can see the name of the fund, tends to outperform on the downside, because when this is to the left of this bar chart is a negative return for a month, to the right is positive. In this example, Jupiter European tends to slightly underperform on the upside, but you get less of the downside. So that's of interest to me. I'd be sitting there looking at that and thinking, yeah, look, you can click on the particular fund and all the bars highlighted. So I'd be looking at that, and if I was worried about the downside, I might be thinking Jupiter Europeans for me. But the one thing to point out is you can rank these columns up here by just clicking on them. You can see I'm ranking it now as for the lowest drawdown, and that backs up what I've just seen in that chart below. Jupiter European tends to have has had the least sort of downside in the last 6 months, but great momentum. Even over the 6 months return, it's still been one of the top performers. So to me, I'll be looking at that thinking, Jupiter European, it's got momentum, it's got plenty of upside, but it's also got a bit of downside protection compared to one or two of the others. And one of the next things to look at is the ongoing charge. And I'd look at this and think, yeah, Jupiter European is actually a bit more expensive. Don't forget these performance figures are net of charges. Two funds, say the CIS European Growth, you can see it's a lot cheaper, and you may be swayed that the CIS European Growth is on a par with the Jupiter European Fund, and you might choose between the two, whichever is important to you. So straight away, we've got down to the fact that you've screened all the funds out there, picked the funds that are outperforming, where the managers are actually adding value. Because the thing is, there's a lot of criticism about managers out there, that whether they add value or not. I don't screen by active or passive. In this selection, you will get passive investments appearing in this section, because if the fund is doing well, I don't care whether it's active, it's a manager, or it's run by a computer. Then you can see in examples here, I just want to show you this. Vanguard Large Strategy 40% Equity. That particular fund is full of trackers, and you can see how it's performed, and that's been identified by algorithm as a fund to buy if you want something that's in the mixed investment 20 to 60% share class. No one else out there does that, because what people tend to do is they tend to focus on one point or the other, either active management or passive, because a lot of ego in investing. What 80-20 investor is about is leaving your ego at the door and not worrying about that sort of stuff. You want to actually try and maximize your returns for minimum effort. So hopefully you can see there already you could have got down to picking a fund that would only hopefully maximize your likely returns, but on very little effort.